Rising tension on trade between US and India hurts sentiment. Energy and realty are the big drags while metals stay resilient.
RBI clears the appointment of former Axis Bank Deputy MD Rajiv Anand as MD and CEO of Indices Bank for 3 years. CNBC-TV18 first reported the story back much earlier that he was the front-runner. The stock cheers the move as the focus now shifts to key management changes and the road ahead.
Anfin has floated the sale of its remaining 5.84% stake in Paytm, becoming the last early backer to make an exit after SoftBank, Alibaba and Berkshire Hathaway. The sale will lift an overhang for the stock.
US President Donald Trump has said he will substantially raise tariffs on India given its buying of Russian oil. India calls the move unjustified and unreasonable, pointing to purchases by EU and US from Russia.
Hello and welcome to Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. As always, with me is Mangala Malu as well as Ekta Batra. Good afternoon, guys. But a bit of a correction from yesterday's highs, what we're seeing coming in for the markets as of now. Nifty, Sensex both down almost 0.5%. We're seeing most of the indices are trading in the red. Mid-cap also trading in the red. Nifty Bank not doing anything exciting as well.
Hi, guys. Yes, absolutely. I think, there's a little bit of sentiment which has been dampened because of all of the overnight cues with regards to tariffs, what could happen in terms of oil prices going forward. So I think that is obviously the big key worry for our markets. But separately, we do have a lot of earnings to reckon with today. So we do have the likes of Bharti Airtel. We have Britannia, which is going to be coming out with numbers. We have the likes of Lupin, Alembic, Torrent Power, Adani Ports. So all of these stocks will be in focus on account of numbers. I think that would probably be one of the key focuses in today's trading session. And obviously, ironing out of any kind of tariff uncertainty would probably be top of mind.
Yep. The interesting thing is that the market has been meandering in this range, give or take all the news pieces. We've been finding support around the 24,550 to 24,600 sort of zone. And as we move towards 24,800, 24,850, we see that supply come by. So we're just moving around. Yesterday, the up move was led by external facing counters. We had the IT stocks do well. We had the metals do well. Now those guys are coming lower. But the autos, they're picking pace once again. So pull up the intraday chart of Maruti Suzuki. That's the one that has moved higher. Some of these auto ancillaries are fairly well bid in today's session as well. So Uno Minda for one is higher. Sona BLW is another one which is up around 2%. And a lot of the stocks actually from the old economy are doing a lot better as well. So pull up something like a CG Power, pull up India Cements and something like an NHPC as well. All these stocks doing fairly well, though there are still more stocks which are declining than the number of stocks which are advancing. Vinny, we have management.
Absolutely, we have a management, and that is Nucleus Software. They reported their numbers last week. This time when you talk about the Q1 numbers, a muted performance that's coming from the company. Growth is seen, actually we're seeing a decline in terms of revenue, 4.9%. This is on a quarter-on-quarter basis. EBITDA margins come in at 15.6%. Now, what is the outlook for the company? Where are we heading now going forward? What should we be watching out for in terms of numbers, order book? What's the pipeline? Given, we've seen T-cells, given those layoff numbers as well. What does it and where does the company stand? We do have Parag Bisse, who's the CEO of Nucleus Software, joining us on the show. Parag, good afternoon and thank you so much for giving us your time. Let's start by talking about the revenue. Firstly, how is that shaping up in Q2? Given that Q1 has been a bit muted performance, what are we watching out for in Q2, FY26? And in terms of order book, where is that standing as well?
So, firstly, thank you so much for inviting me on your show. So glad to be here. You would know we don't give any forward forecast. So about Q2, I won't be able to talk about numbers. But I can talk about...
Year?
No, we don't give any guidance. You would know that has been the company policy. So we don't venture into that area. I can talk about what we are doing at our end, if that can give you any indications. But we continue to work on our fundamentals. The order book you mentioned, again, numbers won't be possible, but order book is looking strong. We are getting traction from market, both from India and from other regions where we work in. we continue to work on our fundamentals that we've been talking about. We embarked upon a lean transformation journey. Lean is a concept from manufacturing, primarily coming from Toyota, and that is it's though our first year, second year just started, but it is giving us indications of huge productivity enhancement. So I can talk about those things and what we are doing on the floor for sure.
Okay, but there was a bit of an elongated cycle, right? Deal cycle, where you were seeing deal conversions were not happening faster. Has that at least improved, and does that, pencil in for the rest of FY26?
So I would repeat that the traction and order pipeline is strong. The conversion, I can't say whether it is, it is taking time. There's no significant improvement. I'll repeat what I had said in some other forum earlier, that for sure we are seeing that the delays are because every such proposal is going up to the board level, even for smaller companies, larger companies, any investment proposal. There is a lot of due diligence that is required, I think, even mandated by the regulator. So those are the factors, I think, which is making it longer to convert orders as compared to anything else that I can attribute to.
Sure. Just wanted to narrow down upon the geographical mix, Mr. Bhise, because we understand that 58% of your revenue is from India at this point in time. Are you looking to change this mix given the kind of uncertainty that we're talking about when it comes to, say, AI, trade tariffs at this point?
So absolutely. And this India focus, I said that earlier, it is not by design. It is, after COVID, I think India was among the first economies that started recovering. That coincided with our new product launches that were happening. So we got first traction from there. We have got about 60 odd customers on India on our new products. We are not because of geographical and geopolitical uncertainties. Even otherwise, the focus is to move outside. In any case, we have a huge customer base in Middle East, in Southeast Asia, few customers in Australia, Japan, and South America. And these customers, many of them are on our older platforms. Now that we have a product on our new technology platform, and it has shown success in Indian market, there's definitely a focus to move to other geographies with our product suite. So for sure.
So do you have an aspirational target as to what proportion of your revenue should move, or rather come from other geographies? Currently it's sub 60%, which comes in from India. And if you could also throw some light on the cost environment, because you've been, earlier indicating that you would like to go to margins closer to that 20% mark, which you've historically enjoyed. How far along are we on that journey?
Can't give, again, no specific timelines or targets, but for sure we would like to go to those margins that we have seen in the past. Our business model, which is more license-based and less dependent on revenue from revenue per person, gives us that leeway that we can, as we do more and more licenses, the chances of not only our top line but our margins also improving are significantly there. We have much better chance there.
Okay. Parag, what about Finaxia? That platform, obviously, you all have collaborated recently also with the HNB Bank in Sri Lanka as well. A lot is that happening over there. So what is the traction there? Anything in terms of client addition over there? You could give us any indication.
Yeah. So Finaxia, while the HNB was in news recently, but I think a quarter back we had also issued a press release with Federal Bank. Federal Bank in India has also adopted Finaxia. That is another very strong offering we have. The traction from India, Southeast Asia is there. But let me clarify that Finaxia is a product line which is which is not a mass market product like our other product, which is the FinOne lending, more on the retail lending. The number of customers, small banks, finance companies, everyone does lending. So from a numbers point of view, for the number of deals point of view, these two are not comparable. Typically, Finexia is taken by large banks who work with large corporates. So it is like more on the corporate banking side. But yes, from a traction point, we are seeing traction on Finexia as well.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Nucleus Software talking about the quarter gone by. Well, for the markets, down around 0.3%, so just about trading with that negative bias at this point. We need to take a short break, but we'll be chatting with the management of Marico on their Q1 performance. Stay tuned for that.
Welcome back. You're watching us here on Halftime Report. The Nifty is now curtailed its losses from about 100 points to just about 60 points. So we'll keep an eye out on that, the recovery that we're seeing from the lows. The auto stocks, which we were talking about, M&M for one, has moved higher. And Trent is the other one I'm looking at. From its lows, it's seen a big recovery over the last few trading sessions. And remember, the company reports its numbers tomorrow. Was a big cut that we saw as they reported their first quarter update, where the revenues grew just by about 20%. So it's not that the street does not know the revenue growth. The important thing to track now will be the management's outlook on what the performance of the company is likely to be, given the sort of store expansion plans that they have. Some important news at the bottom of your screen. SEBI may end weekly options expiry, introduce bi-monthly and monthly expiry. It may bring out a consultation paper on discouraging options speculation. We'll probably get Yash to talk a little more about that, but the fact that there could be curtailment of weekly options expiry does not bode well for some of these capital market names. So we have BSE for one, which is lower right now. But let's get in. Marico reported a largely in-line set of numbers, good numbers coming in, 9% volume growth, which is the highest in the industry. I caught up with the MD CEO, Saugata Gupta, and spoke about the important aspect of the raw material inflation and margins. Let's hear him out.
The worst is over. In the last 2 weeks, it has come out from around 11 to 12% from the peak. Also, you must realize that we have to balance profitability along with supply chain assurance so that we ensure that we have, during these high inflations, we have enough supplies at the right time, at the right place. Because as you know that we compete with a lot of smaller brands as well as unbranded, where they do have supply chain constraints, and this is an opportunity also to grab market share. So I think things have stabilizing, and therefore we will be able to give a far better view of this in the second half of the year. Having said that, I think we are an extremely resilient brand. If you look at even in the last two inflationary cycles where we have taken significant price increases, we managed to hold on to parachute volumes. I think it's one of the most inelastic in terms of brand, in terms of price inelastic brands. It has a strong equity. And as I said that while during inflationary times, traditionally in terms of supply chain and other, we have significant competitive advantage. So I don't see it as a major concern as such. Yes, there are short-term dips in profitability, but as I said, that if you look at history, 1 year of inflation, it always is followed by a deflation, and therefore we make up as far as profitability is concerned over a 2-year CAGR. And the other thing which is interesting is that if I look at the Marico portfolio now, whether it's in India and international, the dependence on parachute has significantly reduced in terms of delivering to the profit numbers. We now have a significant diversified portfolio, value-added hair oils, the part which has done very well, is a high margin portfolio. So I think things are, the dependency also has significantly reduced compared to even say 5 or 10 years ago.
So is it fair to say, you will get clarity on how much better the margins can be, say, in the next quarter or so, but for now, the margins that you reported in this quarter are likely to not be breached on the lower side. Is that fair to say?
Absolutely. I think, as I said, 1 or 2 quarters, I don't think is a problem. I think things will definitely improve in the second half. And number 2, as I alluded to, that as you get into a 2-year CAGR, next year, obviously there will be a significant catch up because this will be followed by a deflation. Because what happens is that whenever there is such high, as you know, that coconut has different sets of demands, and whenever these demand streams ration, whenever there is such high inflation.
All right, so let's talk about the good part of your business. It is the revenue growth. You did extremely well. A large part of that obviously was price-led as well, but volume growth of 9% also is the highest in the industry. How much of this is sustainable? You've targeted double-digit revenue growth. Could you be a little more specific about, what range are we looking at and what proportion of that would be volume-led?
If you look at our trend in the last 4 quarters, we have been, sequentially moving up 6, 7, 8, 9.
Yeah.
And I think in this year, hitting a number, double digit is very much possible. We will attempt to do at least in 1 or 2 quarters. Given the inflation and whatever outlook we have, I think we believe that, and the fact that we are extremely confident of continuing to deliver double digit constant currency growth. And so far, things are stable also on the currency front. As far as the international markets is concerned, there is reason to believe that we should be in the ballparkish 25% revenue growth this year.
25% revenue growth this year with a couple of quarters of double-digit volume growth. The street would really like that. Value added, that's the one. After very long quarters of weakness, it's come back this quarter. Do you think this is sustainable? What is it that you changed for it to improve? How much of that can be attributed to consumer sentiment? And from here on, what's the prognosis on value-added hair oils?
2 things. If you look at the last couple of years, I think we went into a trap of not investing behind the category as a market leader. It is perhaps our responsibility to invest behind the category and not bother about maintaining share of voice. I think competitive intensity was far more at the bottom of pyramid, and there was a significant movement from ATL to BTL, and we also went into that, which I believe doesn't lead to necessarily category growth and offtake growth. And therefore, what we did was we said that we are okay to sacrifice some volumes at the bottom of pyramid. We are not going to get into the trade game, but convert that resources and transfer that resources into investing behind ATL for brands which are, what I call mid and the premium segment, Secondly, I think what has also helped value-added hair oils and is going to continue to help is our Project Setu. As you know, Project Setu aims to increase our overall direct reach by 500,000 outlets over the next 3 years. And especially in rural or semi-urban, I think what happens is that only core brands are throughputed through wholesale. In our case, it will be Parachute and Shanti Amla. So obviously the second, third and the fourth brand in VAHO, whenever you do direct distribution, there's far more range selling and it gives an opportunity to be sold and made available, and therefore, and when you invest, obviously there's brand preference and switch. So I think that is going to sustain, and therefore we are extremely confident with this strategy of maintaining this double-digit value growth for value-added hair oils. And what is interesting is X of Shanti, which is the bottom of pyramid. I think the volume growth also was in double digits for the other brands, and therefore this is a right step. I believe this is a far more sustainable growth, and also the growth is coming in the high-margin component of value-added hair oils.
That's great insight, Saugata. Things are all looking up right now. Are there any risks that you see to growth and any sort of thing that can topple the apple cart? There is a lot of global uncertainty around as well.
See, we are a domestic consumption company and most of the international markets are stable. Obviously, there could be black swans, but I think one of the things we are mindful of is ensuring that we will take every step to maintain Parachute volume growths in the next 1 or 2 quarters when the inflation is high. And that is, we are doing every possible step to do that. I think we firmly believe that we have entered a kind of a virtuous cycle of growth because of all the initiatives we have taken and taking right calls. The diversification strategy is also going well. I think we have to keep on executing well. I think execution is extremely important and stay disciplined in the resource allocation. As you know, one of the things we believe in is that we always believe that we have to drive volume-led top-line growth. Yes, inflation is good for us in some way. The second thing is that we will never manage margins by doing cost management, especially cutting A&P. This is something we have been following steadfastly over the last couple of years, and we'll continue to do that. And I think we have to continue this high level of execution and focus strategy.
Okay, so that's the management of Marico talking about their Q1 numbers. Just want to point out that Aurobindo was the other one that released its numbers last evening. And if you just look at the stock, it's now down around 2% odd. What they did say in the conference call probably deterred a little bit, because they have indicated that the reason why they reported weak numbers was Revlimid generic and the weakness that came through from the US business on account of that. But they've maintained their guidance of low, mid-single digit or 8 to 9% FY26 growth. So that's positive going forward. But nonetheless, let's move on. Sources tell CNBC-TV18 that the Finance Ministry is in talks with SEBI to take steps to reduce options market speculation. Yash is here with all of the details that he's picking up on this story. Yash, go ahead.
Well, CNBC-TV18 had reported it earlier that market regulator SEBI was looking at different ways to do two things. One was to reduce options trading volumes and the speculation there. And the second one was to increase cash market volumes. Now, what we've been given to understand as fresh piece of information is that Finance Ministry has also been in discussion with market regulator SEBI to consider options to reduce options market speculations and the volumes there, and of course increase the cash market volumes. The letter has been sent from the end of Finance Ministry to market regulator SEBI to consider steps in order to do this exact same thing. That is, as I said, to look at reducing options market volumes as well as the speculation there. Now, according to our sources, SEBI has also been considering various steps to be able to achieve this objective. The first one is that market regulator SEBI could consider doing away or removing the weekly options expiry and replacing that with either bi-monthly, which is fortnightly, or a monthly expiry. That could be a big move which SEBI could consider. The second option which SEBI is considering is reducing cash market margin requirement. Currently, of course, the margin requirement towards cash market transactions is higher as compared to options trading, and that is one step which SEBI could consider, which is to incentivize cash market transactions by reducing the margin requirements there. The third option which market regulator SEBI could consider is to reduce, and rather to suggest government to reduce STT or securities transaction tax when it comes to cash market transactions as compared to options market transactions. These are some of the important steps which market regulator SEBI could consider and propose and suggest to the government to take steps towards that. But of course, the government at this point of time thinks that weekly expiry is largely being used for speculation and not for effective hedging, and that's something which it wants to change, and hence discussing steps with market regulator SEBI to be able to do that.
Okay, Yash, thank you so much for that. But on that note, we're going to slip into a very short break. We'll get you more stock-specific action after the break, so stay tuned in. Welcome back to our halftime report on CNBC-TV18. Nifty, as of now, is still down 62 points in trade, though off the day's highest point. But, let's talk about some of these individual stocks that are buzzing and moving in trade today. Vivek is joining in with us to give us that list. Vivek?
Well, thank you so much for that. Well, a very volatile trading session, as was expected. Quite a lot of stocks that are buzzing, mainly on the back of earnings, as well as some important news developments that have happened. First on the list has to be IndusInd Bank. Weeks of uncertainty, and the CNBC-TV18 news break has been confirmed. Rajiv Anand has joined as the MD and CEO of the company stock. One of the top gainers, almost 2% higher, especially as far as the F&O space is concerned. Siemens Energy, remember this is the demerged entity of Siemens Limited. Very strong set of results. Stock high by almost 4%. All-round beat with order book too quite strong. Godfrey Phillips, continues to outperform its peers, especially in terms of top-line growth. That stock saw the company reported earnings growth as well as top-line growth of over 35%. Stock up almost 10% in the session today. And BHEL, after a while, this particular capital goods major is moving quite strongly. This after UBS has an anti-consensus buy call. They estimate that profits could grow 8x from the current levels by FY28. On the other hand, quite a few laggards as well. Manappuram Finance among the key laggards. Remember, the company's subsidiary Asirvad Microfinance has gone ahead and declared its results. It's a muted set. That stock low by almost 3% today. Triveni Turbine, amongst the capital goods stocks, one of the weakest results that this particular company has seen, almost 6.5% lower. And OneSource, this particular pharma space, that particular stock too, among the top laggards in the session today.
Right, Vivek, thanks a lot for that. OneSource will shortly get speaking with the management as well to try and figure out what the outlook for them is. But meanwhile, let's go across to Nigel, who's standing by at the F&O desk to tell us a little more. Nigel, we're lower, but it's volatile within a range.
Well, I'll tell you what, Mangalam, going by the evidence that we have, if the markets go to around 24,550 or there is that temptation, in that vicinity of around 24,500, 24,550 odd, that punt is actually working out because from the lows of the day, yet again, we've recovered. Look at the high and the low of the day, the difference is close to around 150 points or thereabouts. The PCI, the Nifty PCI, that had moved to around 0.95, that's cooled off closer to around 0.83. Because the call writers, they come back into play. I'll tell you what, this is not such a bad thing. Because the call writers, they are writing, the strikes very, very aggressively. So you look at the 24,700 call, it's added close to around a crore shares out there. The premium out there has come down to around 80 rupees from around 133 rupees or thereabouts. So there is writing being seen at that level. You go to the 24,600 call as well. The premium at the start of today was close to around 200 rupees. That's come down to around 130 rupees or thereabouts. But the reason I'm saying that the bulls believe that they can defend lower levels is the markets are down, right? Close to around 80, 90 points or thereabouts. But the 24,600 put, the premium is more or less constant. It started the day at around 68 rupees. Currently, it's at around 70 rupees. So it appears there is more writing at this particular level, which tells you that that 24,525 odd level in the near term, that's one of the crucial support zones that you're expecting to hold out. And that's going to be important. So levels, well, we are in a broad range on the upside, 24,850 mark. That's the important mark. On the downside, that vicinity of around 24,500, 24,550. Stocks that are unfocused today. AB Capital had a big run yesterday. This morning it came in for some profit taking. But after the profit taking, just take a look at the way the stock has recovered and there's a massive spike in open interest. So there's fresh long addition on that particular counter. Nuvama, not a very active stock in the F&O market, but there is fresh buying as well out there. And if you're looking at a short covering bounce, well, CG Power, our technical analysts as well earlier this morning, they're given a call that structurally the stock has seen a bit of a correction. And now it's looking at a bit of a bounce back. And there is a short covering bounce that's playing out on that particular name. And Shree Cement, after coming off the highs of the day yesterday, today as well, it's down close to around 1%. And that's more on account, not cash market-based selling, but it appears there is unwinding of long positions on that particular counter. So for the time being, we're in the range. We should protect the low of the day if the bulls need to fight back. Yesterday, we had a green close, but that came on low volumes. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's the update coming in on the F&O space. We need to take a short break, but before that, just watch out for one stock, Sanofi Consumer. So they're the ones that, have Allegra as well as Combiflam in their portfolio. That one is reacting to its numbers. It's up around 9% at this point in time, doing very well in terms of trade and reacting to what was a good quarter gone by for the company. That's the reason you're seeing that spike up around 9%. We'll take a short break, but on the other side, Manisha Gupta will join in. She has with her Dinesh Somani, who's the founder of Pro IntelliRaid Services. Stay tuned for that.
Welcome back, and joining us on the show now is Dinesh Somani. He's founder Pro IntelliTrade Services. Mr. Somani, hi, thank you so much for joining in. And I want to talk about the gold prices first, because this is where we've seen an all-time high yet again for the Indian markets, even as the international markets are still $50 to $80 away from that 3,500 mark. But the kind of gains that we are seeing in gold, what is it that you see on charts? Are we back on recovery? Do you see newer highs?
Definitely, it's already at a new high. The previous high was close to 1,01,000. Now it has made a new high of 1,01,344. Probably the recent gain is mostly attributed to the depreciation in the Indian rupee. Since July till date, it already depreciated 5%. And in a month, it depreciated more than 3%. So it overall I see the major gain coming out of the dollar appreciation, and probably the COMEX market, if you observe, it is still $140 short of the all-time high. So we expect a dip of around 400, 500 rupees from here, probably 1,500, 1,550 around, and a fresh renewed buying would emerge out of it. We expect gold to test 1,05,000 by Diwali or the year end.
1,05,000 by Diwali or year end. Mr. Somani, also, how would you look at the silver prices? Because we've seen, pardon me, support come in for this as well. It hasn't broken below 36. 39 continues to be a resistance. For this, what's your sense for the global markets, and how do you see Indian markets performing, let's say, by this year end?
Like as you said, 36,000 is a very crucial support. We don't expect it to go beyond below this level. On the higher side, 39.40, 39.50 is a resistance. Probably the 40 level mark is acting as a major resistance, and above it, we may test $43, $44 very soon. Overall, in the Indian market, if we see 1,08,600 is a very crucial support. A previous breakout and any level around this level is a good buying opportunity. Upside potential by Diwali or year end, we may expect 1,25,000 to 1,33,000. Silver looks comparatively more bullish compared to gold as of now.
Mr. Somani, also, how are you looking at crude oil prices? Because today is a fourth straight day of decline, and the markets really are looking at a lot of factors, fundamentals. What with all those statements that we are hearing from US in sense of sanctions on Russia, and then OPEC has continued to increase production. India finds itself in the middle of all of this. One, how are you looking at prices? And with the kind of supply numbers that we are working with markets anticipating that by the end of this year, there could be supply excess, how are you looking at those numbers?
Yes, definitely. Whatever you said is perfect. The production is going to increase because the OPEC countries, they want to have the market share as far as crude oil is concerned. And that's why the reason they are increasing the production. The demand is not in line with the supply. I mean, the supply's excess, demand is limited. Overall, we see the prices are going to be in the range of downside max to max 55.50, upside max even 6,100. This 600 price range is there for next 3 to 4 months. Overall, I mean, if I look at the chart structure, prices rallied from 47.50 to 6,600, then suddenly collapsed to 55.50. So whenever there is a huge rally and a vertical fall, the next 3 to 4 months goes into consolidation. And that is what is observed in crude as of now. In a very narrow range, I could say 5,700 to 1,500 is the range that is to be there in the next 1.5 months.
Mr. Somani, you also follow natural gas quite closely, and we have seen continuous, constant profit taking into this one as well. Do you see it now trading near its supports levels, or is there a chance of a further decline from here?
Yes, 255 is definitely a short-term support. We've seen a fall from almost 358, 360 levels. 100 rupees fall is on the chart right now. And a pullback rally might be there, definitely. But since it's a lean period, the demands are lesser and stocks are ample. If we compare both the months, June and July, the stocks are increasing and they're almost at the highest level. So overall, the structure, even on the chart, looks weak. A pullback rally towards 285 to 90 would again attract selling. Downside, it's minimum 235 on chart, and 312 should be the stop.
Since we have you with us, Mr. Somani, I also want to talk about copper now. That very sharp decline or sell-off that we saw in the previous week, almost by 25, 28, 30% in some of those contracts there. Is that sell-off done? Are we more balanced when you look at the other international markets, which is LME and Shanghai as well? And from here on, for the very near term, how are you looking at copper prices?
Like the COMEX rallied mostly on the tariff concerns. It was about to raise the tariff and it rallied almost abnormally. And it fell also abnormally. It's fall almost 27% from the recent high. While LME was intact, it is still trading around 66, 96, 9700. So we don't expect a much greater fall in COMEX as of now. Downside, if I say a broader range to 867, 870, that is a major support, a crucial support. We don't expect prices to close below this level. Upside 905, 910 is a major resistance. Overall, if I see any fall towards 880, 878 level could be a good buying opportunity. Stop loss on closing basis should be 860. Upside we expect by Diwali till 937 levels. That should be definitely there.
All right, Dinesh, thank you so much for joining in. Manisha, thank you so much for taking us through that conversation. Before we slip into a short break, a couple of Tata Group companies are doing extremely well. Titan reports its numbers in the later part of this week. Trent does it tomorrow. Both these stocks have moved higher to the high point of trade. So that's something we'll watch out for as we move forward. In fact, let's take a short break. That's Trent We have the quarterly updates for both Triton and Trent. The street did not like, in particular, the revenue growth rate for both these companies. Let's see what the companies have in store for their operational performance. 3,400 on Titan, Trent up to 5,334. Take a short break, more on the markets and individual stocks.
Welcome back. Well, let's talk about one particular company. OneSource Specialty is the next management that we're speaking to. The company has reported what was a weak set of earnings, especially on a Q-on-Q basis, with the revenue declining 23% sequentially. The margins also declined this time round, but the operating expense has also come down Q-on-Q. To talk more about this, we have the managing director of the company, Neeraj Sharma. Mr. Sharma, thanks very much for taking the time out. If you could just take our viewers through why there was a sequential dip, and quite a sharp dip you'd have to say, in terms of the numbers this time.
Yeah, thank you, Vinny. Thank you for having me over. As we have said last time, also when I came in here, that FY26 for us is a transition year. You see, FY25, our principal business of drug device combinations was primarily based, the revenues were primarily based on the service fee which we get. And from FY27 onwards, this business will be giving revenues primarily from commercial sales. So this is the year FY26, which is a year in transition where we'll be actually moving from the service, the pre-approval service fee to a commercial in the second half. And that's how, we have said that our first half will be heavy, where we'll be doing, executing our MSAs. And the second half is the one where the commercial revenue will start flowing, and that will be heavy. So, keeping that in mind, our first quarter performance has been as per our expectations. If you see how we have grown quite significantly versus last year. So the year-on-year growth, whether in revenue or in EBITDA, has been very significant. And as you progress in the next few quarters, you will see that with the commercial launches happening in H2, we'll have a significant H2.
Okay. When you say a significant second half, it is going to be based on your drug delivery devices, what you are going to be supplying for GLP-1s. Just quantify how much can we probably expect towards the end of this fiscal in terms of what the commercial orders could be for OneSource.
Yeah, so I think we have again mentioned that we are very fortunate to be working with some of the largest companies in the generic field, the global players, the regional leaders, country leaders. So we have a very strong customer base here, and these are all looking at launching in the markets which are coming off patent, whether it's Canada or Brazil, at the time of market formation. So what today we are sitting on actually is purchase orders from them. In fact, what has also happened, we need that over the last couple of months, all our customers who are actually going to be entering the market at the time of patent expiry have actually been increasing their forecasts for launch. In fact, based upon the fact that we have all these customers on take or pay contracts, we have actually taken the leap, and actually we are advancing our capex program actually, whereby significant increase in our capacity, which was actually earlier supposed to happen in FY28. We are bringing it a year ahead, FY27. So, keeping all this in mind, we see that, our customers will be launching on time, assuming they get approvals. And B, we are reiterating also our midterm growth aspirations, which we have set to be a 400 million revenue company basis organic growth with a 40% plus EBITDA margins. And a significant part of it will be
Mr. Sharma, actually, you preempted the question around 400 million and 40% EBITDA margins. You spoke about medium term. What we want to understand is how do you define that medium term? Do we see that number coming by, say, FY29, FY30? And if FY26 is, a transition year, then what's the glide path to that? Do we see a big jump in FY27 over FY26?
Yeah, so the aspiration which we mentioned, the guidance which we have clearly said is actually FY28 numbers on an organic basis. So it's a fairly, fairly next to 2 to 3 years is a time horizon which we are saying. FY28, that's the guidance. And FY27 is the year where the commercial revenues full year will be there. So it's going to be a jump. Definitely. But as you see, moving from roughly about 172 million, which we did FY25, to about 400 million organically in FY28, that's how the transition is going to be. FY27 full year commercial, and then FY28 again ramping up further.
Right. Mr. Sharma, two-part question coming in for semaglutide. One is the Delhi High Court has restrained Dr. Reddy's as well as OneSource from selling semaglutide in the domestic market. What's the update on that front? Also, we had comments that came in from Sandoz this morning as well, saying that, in Canada, they would launch semaglutide at 60-70% at a discount or, price cuts versus what it's sold at. Do you think, now semaglutide may not be as lucrative, both these parts?
So I think on the first part, unfortunately, as you know, it's a matter which is sub judice. I won't be able to say much other than the fact that we are very much allowed to manufacture the product as we speak and sell in the markets where the patent is not there. To what you highlighted, what the CEO of Sandoz has said. I think that's a question better posed to our customers, because today we are manufacturing based upon our customers' forecasts. And I can tell you, basis the increased forecast which we have from all our customers are very bullish. Our customers are very bullish to launch in these markets, whether it's Canada or other markets which are opening up. And that bullishness has been continuing. And as I mentioned earlier, that thanks to that bullishness, we are actually even advancing our capex program just to ensure that we fulfill the demand which our customers are putting on us.
But you're not just supplying semaglutide. You are also supplying for other GLP-1 drugs.
Absolutely. So we have actually our strength is in drug device combinations.
So would that include Eli Lilly as well?
As of now, as I said, we are a very, very strong player in the generic space in GLP-1s, which are already in the market. And going forward, as we speak, we are engaged with the companies who are actually going to come up with the next wave of GLP-1s, innovators who are going to come in the next wave. So as you know, there are multiple candidates in this space. This is such a attractive and revolutionary space that there are many, many candidates. And we are engaged right now with some of the innovators who will be coming in the next wave.
Okay, all right. More on that soon, Mr. Sharma, once we get more clarity in terms of a couple of these contracts. Thanks very much for joining in and speaking with us and giving us your perspective on OneSource Specialty. So the next leg of growth will probably come from GLP-1. FY26 is expected to be lumpy, but FY28, they're sticking with their guidance of $400 million with 40% margins, and that would be based on the supply of a lot of these devices which are used to give GLP-1 drugs to patients. Well, we need to take a short break on that note, but we'll get you a lot more on stocks once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty continues to be around the 24,600 levels. As of now, down almost more than 80 points in trade, 0.3% of decline that we're seeing, recovered from the day's lowest point, but still some bit of a pressure there. Broader end of the markets are also not doing anything exciting. Mid and small cap both down almost 0.4% in today's trading session. Bank also seeing a decline of almost 0.3%. But that's all the time we have on this edition of Halftime Report on CNBC-TV18. Thank you so much for tuning in. Up next, Business Lunch.